What up?
Morning.
Good morning. All right. Good morning, Shantina, Donna, Greg, John in the house. Good morning, John. Good morning, Maria Nella. Kicking us off right on this Thursday morning. Thank you, guys. Fantastic.
Good morning. Great morning so far, that's for sure.
Good morning, guys.
Yeah, good. Good morning, Nathan. Good morning, Stacy. So, yeah, like we alluded to, the reason I got here a little bit late because I was tallying up the sales. You guys were dropping sales last minute before our meeting, so that's good. So, anyways, well, thank you guys again. Fantastic work out there this week. So far, so good. You guys are doing really well. We are missing a few people. Let me see if we can get them connected up here on Slack. Hang on one moment. Okay, looks like we got them there. 1, 2, 3, 4, 5, 6, 7, 8. So we're missing a few. Kai, Ariel. Okay, got it. All right, my friends, we're going to go ahead and get things started this morning. Kind of like I mentioned before, the game plan today is going to be going over some carrier training. I've got a little bit of information to share with you, kind of an informal, impromptu, high-level overview as far as choosing the right carrier for the situation. Hey, good morning, Dennis. Also, in addition to that, we're going to talk a little bit about how the commissions are calculated, being that we just wrapped up the month of July. We're in the process of confirming that. Oh, yeah, somebody coming in. We're in the process of getting all the numbers wrapped up, making sure we've got all the T's crossed, the I's dotted, etc., so that way everybody gets paid accurately. But just want to go over the information just so that way you have a really good idea of what to expect with that and how you're going to get paid, etc. So that way we can go through that part this morning. And then also I've made a bunch of updates to the carrier cheat sheet. So if you haven't looked at that since yesterday, again, we've got some updates there that I'll share with you this morning. Let me get this organized the way that I like to have it. This multiple screen thing is fantastic, but sometimes it's kind of a pain to keep up with it all. So, all right, any questions before we jump into it today? All right, I do have a question for you guys, just a general question. Chime in just to kind of get a pulse on where we're at. I know this may not be a topic that we've covered extensively, and that's the reason why we're doing this today. But just out of curiosity, who can jump in and tell me what your personal goal is as far as selecting carrier? So how often are you aiming for first day full coverage? How often do you feel like you've got no other choice and I've got to go graded or GI? Can somebody kind of give me some insight on your thoughts there?
So I was under the impression that the toolkit would decide that, and we would pretty much just go down the list. Is that from the first carrier displayed and on down the list? So that's usually my train of thought. I think it was maybe one other time that I skipped over the first one and went to the second one.
Got it. And anybody want to say specific? And that's a good point, John. We'll cover that in more detail today. That's exactly what we're going to talk about. Anybody else want to chime in on what their estimate of your goal for writing level coverage? What is your goal? Donna, do you have an idea?
Yes. So when I'm putting in their health concerns and their medications, I as I do that, I kind of go and I quote a few times just to see if anything knocks out, because if it's GI at that point, I probably don't need to enter any other
Correct.
things. So
yeah, if you have like current cancer or some kind of a medication that just immediately knocks them into GI only, no other questions necessary. You're 100% correct. What I'm trying to get at is if you look back at the month of July, in this case, what would your hope be as far as the percentages for your level compared to graded or GI? how often do we want to aim for level? I mean, we're always aiming for level, right? Whenever we can, but like looking back, like what would that number look like that you guys would be happy or satisfied with?
I guess we'd be satisfied with all of them being.
Okay.
Sorry, I cut someone else off.
Okay, no worries. And that's exactly why we're having this conversation, because I feel like we could do a lot better at being more specific on these numbers. So let me know when that screen should be showing there, correct? So, okay, thank you. So that being said, your goal is to write a level first day full coverage, obviously whenever possible. But what the numbers will tell you is that you should be writing 60, 70, 80% first day full coverage. And if you're not doing that, then we've got room for improvement, right? Because the carriers that we offer for first day full coverage between the 3 options for level, you should easily be able to get 60 to 80% people first day full coverage 60-80% of the time. So second to that would be a graded plan. Graded can happen, and I can include modified there also. Graded is going to happen in one of 2 ways. Either number one, you put all their information in insurance toolkits, and GTL is their best option because GTL only offers a graded policy. Or number 2, you apply for good morning, Ariel. You apply for either SBLI or Trinity for level, but there was something in their medical history, something in their prescription drug check that came up that they didn't tell you about, that they didn't qualify for the level as you applied for, and the carrier downgraded it to a graded or modified plan. The reason why in most cases you always want to avoid doing a graded or modified with SBLI, Trinity, or any other carrier for that matter is because those policies, number one, they're more expensive than whatever it is that you originally quoted them. But number 2, because those policies, to my knowledge, are when they get downgraded, are always going to be a 2-year waiting policy. So it's the same coverage as a GI plan. So like, why even put it with that carrier? Now, in my opinion, if I applied for Trinity, it got downgraded to graded because I didn't know, like there was something I didn't know about. I'm just going to press forward and just submit the policy as long as they're comfortable with that price. I'll probably go back to insurance toolkits just to double check. Hey, was there another option I could have got first day full coverage? Or if GTL was the only option in that case, knowing what I know now, then I would just keep it with Trinity and just press forward with the graded, because a graded policy with Trinity is better than no policy, right? Because there could be a potential that they're not willing to go through another application process. They're already tired, exhausted, ready to get out the phone. You kind of have to have a feel for it. Again, ideally, it would be like, oh, I should have gone to SBLI because I found out you had COPD, and SBLI will take that first day full coverage, but Trinity won't, or whatever the subject, or maybe it's CHF and SICA would have taken a first day full, like, you know what I'm saying? So you need to kind of judge for yourself, like, is this somebody that I could keep on the line? They're willing to go through another application. It's kind of like like you have to decide for yourself, right? Because if you keep the policy there, it's probably not the best coverage. There's something probably a little bit cheaper, or the alternative be they have to go through another application process, and so you kind of balancing it out. Do I want to just take the, what do they say? What is the saying, that a bird in the hand is better than one in the bush, or 2 in the bush? In this situation, the one that I got approved, like, hey, I've already got approved for this. Most of the time, I'm just going to go with this, unless I feel like I've got a really good rapport and they just really want to be price conscious. Then I'll transition and maybe go into Seek or another carrier if I can get a first day full coverage elsewhere. Questions on that? Is that making sense so far? So one of the reasons why this is really important, thank you for the feedback. One of the reasons why this is really important is because the people that fall off the books, the people that cancel their policies, what you'll notice over time is that it's literally the reverse of these numbers right here. 70-80% of your cancellations and chargebacks will be people that are on GI plans. For whatever reason you want to imagine, they're just more sick, they got more health problems, or like whatever the circumstances are, I'll let you deduce that on your own, but you basically reverse these numbers. So because of that, that's why we always want to aim for the first day full coverage, because those people tend to stay on the books better than people that are on a graded. Just because you have an AIG policy doesn't mean they're going to cancel, but just in general, That's kind of how the numbers kind of trickle down. So obviously first day full coverage is always going to be better for them. So if they die tomorrow or after they make their first payment, they're fully covered, right? So it's honestly better coverage for them. That's the number one reason. But for you as an agent, getting them the best coverage or at the lowest price and not being lazy and just writing Sika because it's easy and I know how to do it, even though SBLI or Trinity would have offered them coverage, is not the right way to do things. And you will be penalized in commissions and persistency if you choose to go that route. So that's why I want to cover that. That's why we're going to get into the reason why we're going to discuss this topic a little bit further this morning. So questions so far, my friends? Is all that making sense and understanding kind of the overarching idea and strategy and why we're doing it that way? Cool. Thank you. I appreciate the thumbs up. That really helps. I really like Google Meets for that one reason, is because it gets the instant feedback. So now I'm kind of a visual guy, as you guys may have already figured out. So again, if you were to take these numbers and put them on a pie chart like I've done for you here, let's say you look back at your last week of business, the last month, whatever it is, this would be a healthy result. Now, more green is always good. More level policies and less yellow and red is good. Where I would get concerned is if your graded went over 20%, if your GI went over 20%, just like this, these numbers show here. If I'm above those numbers, like that's a red flag situation. Did I just come across a bad week in a situation? I just happened to get more sick people? Or do I need to go back and review my cases because there was probably a potential I could have gotten better coverage and I just may have been lazy or inexperienced or whatever the circumstance might have been. But this is your overarching goal or your plan. And again, more level is always better. If you're less than 60% level, that's a red flag for me. If you're more than 20% GI or more than 20% graded, that's another red flag for me. So that's the reason why on the dispositions that you guys have noticed, we've updated the dispositions and Go High Level on the opportunity to include the carrier as well as the coverage type, because we're going to be monitoring and measuring these things. Again, this is primarily for your own benefit, because the more level you write, the better you're going to get paid, and then the better coverage it is for the client. So it's a win-win circumstance or situation. So if any of this doesn't make sense at any point in time, just feel free to unmute and fire away at me. We'll keep it casual and just chime in if something doesn't make sense. So here is our carrier lineup. And here is a little bit more detailed version, basically, of the same information. So if you look at this, 60% of your policies would be with Trinity and SBLI. 20% or less would be with Sika. And this Sika is kind of the oddball here because they're the only carrier on this list, or otherwise, actually, in general, that I'm aware of, because Great Western is now out of the business, that offers both level and GI product. Technically, AIG offers a level product, but there's a lot of disadvantages to that product, so we don't sell it. We just sell their GI product only. Sika, though, there's use cases for both their level, because it's 0 to 85, as well as their GI, and primarily because it's 0 to 85. That's really the only or the primary circumstances in which you would use Sika. So if you had 20%, that would mean 10% of that would be Sika level, 10% of that would be Sika GI, right? So that still kind of lines up with these same numbers that we talked about before based upon the carrier. This is just a little bit more detail. So one way that I kind of imagine this would work out is if you run these numbers here, somebody wants to chime in. Let's say you look back up at your last 2 weeks of production and you wrote 10 policies. So tell me how many of each carrier, based on these percentages, for writing 10 policies, would you be writing approximately? Somebody want to jump in and help me out here. I like being interactive. Don't make me call on you. I will call on you.
If it's out of 10, that'd be 3, 3, 2, 1, and 1.
Thank you. That's exactly right. So if you look back over 2 weeks worth of business, or heck, 1 week, and you wrote 10 policies in a week, that would translate to, I wrote 3 policies with Trinity. I wrote 3 with SBLI. I had 2 Sikas. I had 1 GTL. I had 1 AIG. That should be kind of normal. Now, Will you see that same variance on a day-to-day basis or even a week-to-week basis? There'll be some more fluctuation there, but when you start looking over a longer period of time, over a month, over a quarter, over a year, these are the numbers that you should be aiming for. And if you are significantly outside these numbers, then there's something that you need. That's a red flag. That's something that you need to work on. Go back to the carrier training, have a conversation with me, and figure out why your numbers are not what we're aiming for. So yeah. One other thing, going back to John's question earlier, when I am in insurance toolkits and I'm quoting somebody, I'm always going down this list, meaning if there is a Trinity or family, I just use Trinity for short. It's family benefit in some states, just for everybody's sake, but I just call it Trinity. If there's a Trinity or family benefit policy available, it's most likely going to be the cheapest. But even if it wasn't, I'm always going to choose Trinity first. Why? Who knows why?
Persistence.
That is my number one motivator. Trinity has the highest persistency level out of any carrier. Their 13-month persistency is somewhere between 90 to 95%. Industry standard is closer to 80, 75 to 80. So, in other words, the likelihood that when I write a policy with Trinity that I'm going to get my full 12 months commission is 90 to 94%. My persistency with AIG is probably closer to 50%. Again, that's the reason why we want to make sure that we're choosing the right carrier. So anytime that somebody is eligible for a Trinity, even if it was the most expensive policy in insurance toolkits, I'm always going Trinity. Same could be said for SBLI. I'm always going to go with SBLI if I can qualify them for standard or preferred. Even if Sika, GT, if one of these carriers, they typically wouldn't be, but in a weird case where they were, I'm always going to go with SBLI if a first day full coverage option is available. And then third, if there's a first day full coverage option with Sika, I'm always going to choose that over GTL or AIG. Meaning, again, we'll go back to CHF, congestive heart failure. Let's say they're on oxygen. Let's say they're in a wheelchair. There's a lot of unique circumstances that Sika will cover that nobody else will, or perhaps they're under 50 because all of our carriers start at 50. Actually, I think GTL starts at 40. All of the first day full coverage, these policies start at 50. So if they're under 50, the only way to get them first day full coverage with this lineup is with Sika. From there, you've got GTL. Who can tell me what the coverage for the client, how the graded plan works for GTL?
JD, so the first year it's ROP plus 5%. Second year is 50% face value, and third year is 100% face amount.
And why is that better? Why is that better than GI with Sika or AIG?
Because you have to wait 2 years before that would kick in. So with GTL graded, it would be that first year.
Correct. That's exactly right. And what is ROP?
Return of premium.
What does that mean for the client? Like, I'm a client. I don't know. What does that mean, my premium?
Sure. So whatever you paid into that policy, and if you were to pass away within that year, you get that plus the 5%. So whatever you paid into the policy, you will get an additional 5% with it.
Exactly. Exactly right. Thank you for that, Donna. So yeah, that's exactly why we like GTL, preferably over going GI with Sika or AIG, or preferably with going over a graded modified plan with Trinity or SBLI. That's why GTL is sweet. Is number one, they're getting more coverage more sooner, is what I say. I know it sounds silly, but that's how it sticks in my head. GTL is more coverage more sooner or more quickly. And so year one is still return of premium plus, in this case, 5%. So I just say return of premium plus interest is what I tell the client, because the percentage of the interest is not much money. But I just say plus interest. And then once they hit 12 months, from after 12 months moving forward, is now 50% of the face value. So again, if I had a $10,000 policy with AIG, the first 2 years, I'm only getting return of premium plus 10%. Whereas GTL from year 1 to year 2, I'm getting 50%. So I have a $5,000 policy from year 2 to 3. And then once they complete 24 months, then they go into the full coverage. So that's why GTL is great. What you'll find is the price for GTL, at least in my experience, is right in the ballpark of writing GI with Seeker or AIG. It's about the same price. But again, the reason why it's fantastic is because it's more coverage more quickly. And number 2, it includes Sequoia Concierge. Who besides Donna can jump in and describe what is Sequoia Concierge?
That's a funeral planning services that's added at no additional cost to the policy, whereas they'll come in and they'll help you plan the services in advance. So when that time comes, you'll have a good idea what the service is going to be like. You don't have to focus on so much on the financial aspect of a loss of a family member. You have more efficient time to grieve, and you'll be able to get up to 40% off on all of the funeral services, which is going to put more of that face amount into the beneficiary's pocket.
Absolutely. Absolutely. What other carrier offers Sequoia that's included for free?
GTL.
Which other carrier?
GTL.
Which other carrier?
Oh, I'm sorry. SBLI, GTL.
There you go. SBLI and GTL include Sequoia for free. You can technically add Sequoia to, like, you can sell it separately. I think it's like something like $5 a month, but they charge you annually, so it's like $20 for the full year. Nobody does that, by the way. The reason why Sequoia is fantastic, for everybody that knows, it is a persistency improver. It improves the likelihood of them staying on the books. Why? For a few reasons, kind of like John talked about. Number 1, Sequoia Concierge Service is exactly what a concierge sounds like. So you're at a hotel, I'm hungry, I want to go to the restaurant, I want to do this. Like, I don't have to like go anywhere, ask it. You just go down to the concierge and like, hey, yeah, I'll get you a cab. Hey, yeah, you want to go to this restaurant? They basically handle and give you all the recommendations so you don't have to fuss or deal with anybody else. Same thing with Sequoia. So what will happen is when the person dies, they have a single point of contact. They don't have to call the funeral home and the director and the wherever the plot's going to be, or the cremation or the church. Like, they are a concierge service. So they are the single point of contact, the only person that the beneficiary would need to contact. They're going to help make sure that they get the policy, like the check, like file the claim, get the death claim filed for the policy so they can get the payout. They're going to shop around all of the different funeral homes in their area to find out which one's going to be, kind of like what we do. They're like a broker. They're going to call and contact all the funeral homes in the area, give them all their options so they know their best price. Negotiate the price down for them, and because of their relationship, they typically get a discount anywhere from like 20, 30, 40% difference reduced versus what they would have had to pay out of pocket if they just called the funeral home themselves. The reason why it's so good for persistency is because that policy actually includes up to 10 people on the plan. Now, the person that owns the insured on the SBLI or GTL plan is one of them. That means they get to add 9 other people that will receive that same concierge service for absolutely no cost to them, as long as the insured keeps their policy in place. So the reason why the persistency, why it's so beneficial, is because after they, their policy is enforced with SBLI or GTL, Sequoia is going to reach out to them and go through and give them the details, the phone numbers, the contacts, all the information that they're going to need and how to handle that. And then also ask them to put those 9 people onto the policy that they want to put. The reason why that's really cool is because if I'm getting a free funeral concierge service and I called 9 people up, like, hey, I get this for free, I'm going to put your name, number, email on here, so that way if something were to happen to you, your family would get this additional benefit. Maybe it's their kid, their sister, their brother, their uncle, their cousin, their friend. It doesn't even have to be a relation, anybody they know, up to 9 people. And so what happens is, if they cancel that policy, not only do they lose their own coverage for their life insurance policy and concierge service, but none of those people lose that coverage now because they don't keep it in place. So that's the reason why it helps with persistency. So that's why it's important for you, because it helps you keep your business on the books, and it's important for the client because we're providing the best possible service. The way that this coverage kind of came about in the industry, for those that aren't aware, is primarily driven by those captive insurance agencies like Lincoln Insurance, Lincoln Heritage. They offer this, I forget, like call it the Garden Club, and you guys can correct me what the details of if I'm saying that wrong, where they have to upsell this additional product. Their product is already super expensive, like comparably to the other products, that we work with. But then when you add that concierge service on top, it's even more expensive. But the way that the agents, their commission is structured, they get a massive reduction in their commission if they don't include that plan or sell it with it. Because the reason why Lincoln Heritage does that is because they know with that additional benefit that the business just stays on the books a lot more by having that extra coverage and that extra benefit. Is that making sense? Does everybody kind of understand Sequoia? Does everybody understand the carrier lineup, when to use which carrier? So in other words, if you write a SICA level policy, I'm not pointing fingers at anybody because almost everybody's written one at this point. If you write a SICA level policy and I go back and review your case, you better be able to justify why you went with SICA and not with SBLI or with Trinity. Okay, because they're either outside of the age range or they had some kind of a health condition or medication that would have disqualified them for the two carriers. So don't get lazy. Don't overwrite with SICA, in other words. So if you look back at your business over the last 2 weeks and you wrote 7 SICAs and the rest were kind of spread around the other carriers, that's a major red flag, right? It's important for you because it's going to impact your commissions. And it's also important for you because it could potentially affect your persistency over time. Because it's going to have a less persistency as you would with SBLI or with Trinity.
Hey, JD,
Oh,
go ahead.
sorry. I have a question with the GTL. I'm not very familiar with the product itself. Do they take like the AIDS, cancer, the same as AIG?
Nope. They have. That's a really good question. So GI, for those that are new, GI guaranteed issue. The only thing you need to qualify for SICA DI or AIG is you have to have a pulse, you have to have a social security number, and you have to have a bank account to make the payment. That's it. There's literally not a single medical question. Like you could be 9 toes in the grave, like barely hanging on. And as long as you can answer the questions assigned, then you can get accepted for those policies. SICA is kind of that, or I'm sorry, GTL is kind of that very last. We sometimes David DeFord will call it near GI because the coverage is kind of near GI, and you only have to answer 6 medical questions to qualify. I don't have them all memorized off the top of my head. I'm kind of a little bit rusty, but they do include things like current cancer, amputation from a disease, HIV. This is where I start losing steam here. And there's a total of 6 questions that they would have to say no to qualify for GTL. But it's basically like the super major ones like cancer, like current treatment for cancer. Not if you beat cancer, but any current treatment, they'll disqualify you there.
So really the GTL product is for somebody that just had a heart attack or just had a stroke then?
Exactly. That's a very good use case. Like if I had a heart attack yesterday, you can't get coverage, probably level coverage anywhere. I don't know, SICA may be an exception there. But yeah, GTL would be like the perfect use case because you don't have a heart attack today, you're still alive, you're not as healthy. It's kind of the in-between GI and level coverage, if you want to think of it that way. But that's why we like it, is because it's better coverage more quickly. Sequoia, and you get more commission for GTL than you would for a GI case. In addition to that, so good questions. Was there another question here?
Yeah, JD. I thought Trinity had Sequoia too. I think you left that out. Doesn't Trinity have Sequoia? No,
they do not. No, sir. They don't, unfortunately.
Could have sworn they said that in the training. I have to go back and listen to it.
Yeah, correct me if I'm wrong. If that's changed recently, that would be fantastic. That'd be great news. But to my knowledge, the last time I spoke with Alvin, they don't have that. So if they do, let me know because that would be great news. I would appreciate that.
Or maybe the training is old.
Yeah, no, they never had it in the past, so it's not like they had it.
Gotcha.
So if they do have it, it's something they've added here in the last 12 months. So correct me if I'm wrong. Yeah.
Yes, sir.
All right. Now going back to when we talked about kind of this generic, this is kind of just by policy type and level. For those that don't know, level includes your standard and your preferred. So somebody like SBLI, Trinity just has standard, and then they have graded. SBLI has standard and preferred. So standard and preferred are both first day full, excuse me, first day full coverage. The only difference is preferred is just a better rate, meaning you're more healthy, so it's going to be cheaper, but it's still first day full coverage. So here is a breakdown with all of the carriers and all the policy types. So again, you see Trinity and SBLI and Sika level, that equates to, you guessed it, 70%. And then the remaining 30 in this example is divided up between that graded with GTL or a GI case with AIG or Sika, right? So in other words, if you had 10 policies, you wrote 3 Trinity, 3 SBLI, 1 Sika level, 1 GTL, 1 AIG, and 1 Sika GI. That should be your game plan. So if anything that you're writing, especially in these 4 here, is significantly more, or if your Trinity or SBLI is significantly less, that should be a red flag for you to go back to review the carriers, review the underwriting, or even have a conversation with me. We can review the cases and that sort of thing. So that should be kind of the overarching view. So again, if you are significantly more than one of these numbers here, then that should give you an idea that there's something that you could potentially be doing better. Now, you could just have a bad week or two and you're just like, holy cow, I'm just nothing but freaking sick people. Like that happens. I had a case where I think I went 1 or 2 weeks where I just wrote like half of my policies for AIG. And I became known amongst my peers as the Grim Reaper because they kept showing up to all these nearly dead people. What I found out is, though, being here in the state of Colorado with the higher altitude, like I think my house is at like 7,000 foot. That the people here are more often on oxygen. They're oxygen users. So you get your CHF, your COPD, bronchitis, emphysema, like any of those kind of people that are typically chronic and they otherwise wouldn't need to be treated. But because of the higher elevation here, the lower oxygen content, they need the extra oxygen to supplement them. So it's more common and prevalent here. And at the time, we didn't have Sika. So if you're on oxygen, you immediately went to AIG. So if I walked in the door and I saw tanks on the ground or they're connected walking around on the leash with the nasal cannula, I'm like, dang it, another freaking AIG case. But yeah, that should be your goal is as far as choosing a carrier, choosing the policy type. It should look relatively close to this. Again, more Trinity, more SBLI is always good. And less of this is always good, but just to kind of give you just kind of a measurement, a goal, an idea, a guideline of where you should be. Questions on this? Is this overly complicated? Does it make sense the way it is? Give me a thumbs up if you're like, hey, cool, this is a light bulb moment for me. I kind of understand what my goal is in writing coverage. And if I'm not, okay, good. Seems like everybody's appreciating that. If you got questions, again, feel free to jump in and fire away at me. Now, here is the carrier advancing. This is now for you as an agent, the reason why it's important why you would choose some of these carriers over the others. So obviously for the client, always trying to get them the best coverage, first day full coverage, lowest price, that kind of a thing. But for you, you need to understand how you're getting paid on commission. So for some of you folks that you're new to final expense, I want you to pay attention to this information. You should have already understood and reviewed this information when you went through the initial carrier training, but I want to make sure that you understand. So the advance is how much of that first year commission they're going to pay you up front. So if you see 75% of 12 months is how many months?
9.
9.
Thank you. 9 months up front. And then 50% would be 6 months up front, right? So that's the difference here with these different carriers. So guess what? Sika, whether it's level, GI or otherwise, they're only getting you 50% advance, right? And so if I could write a level with Trinity or SBLI, I'm going to get more of my money more sooner. So that's the reason why it's better. And so one outlier here is AIG. They do actually offer 75% advance, which is basically unheard of for GI policies. And the reason why you normally see lower advances on these, should be kind of the giveaway here, is because these policies are more subject and more likely to fall off the books. AIG is the exception here. They have really good Social Security billing, and so their persistency level is higher than it normally would be for a GI policy. So that's the reason why they offer us currently 75%. It wasn't always that, but it is now currently 75% advance. Now, as far as the payout schedule goes, you can get paid on issue or you can get paid on first draft. Somebody who hasn't answered already, can you tell me the difference? Well, what does that mean? What does on issue or first draft mean as far as commissions?
One of them pays out when the policy issues. The other one does not pay out until they draft the first payment.
Correct. That's exactly right. So if I wrote a, let's just say, well, Trinity is kind of the complicated. Well, let's use Trinity. Trinity, let's say if I wrote a Trinity policy today, it is the 15th. I scheduled their first payment for the 1st of September. That means half of my advance, and your advance is 75%, half of it will be paid on issue, which means today, as soon as I submit the policy and they have all the information to give the approval, I can now get paid now. Their actual schedule, I think, is on Tuesdays and Thursdays, which, you know, I'm not going to get into the schedules for all the carriers. That's the reason why we're doing it monthly, so you don't have to worry about that. But just understand that you're eligible for this month in July. I will get half of the 75, which what they actually do is they give you 37%. And then on the 1st, so next month, you'll get the 38%, right? And then the remainder of this percentage to equal the 100 will be paid as earned. So in other words, if I got 9 months advance with SBLI, the other 25% of my commission is paid as earned, which would be month 10, 11, and 12. Or if it's a SICA or a GTL product, I'm going to get 6 months up front, and then I'll get as earned money. As earned means when the client makes that payment, now I can get paid. You'll get as earned money for SICA and GTL in months 7, 8, 9, 10, 11, 12. So you won't get all of your 12-month commission money today. You're going to get a portion of it, 75 to 50% of it now, the remainder of it in those as earned months. The caveat to this, who could tell me a circumstance when you would not be able to get an advance with any of the carriers? Who knows that answer? When would you not be eligible to get an advance?
When they're declined?
Well, you're not getting paid if they're declined.
I think it has to do with the method of payment, if they're using like a credit card or something.
Bingo. Anything plastic. So if it's a credit card, debit card, direct express card, if that's how they're paying, that business has the tendency to be less persistent. Again, all of this is driven off of the history of the persistency of the type of policy, the method of payment, the carrier, etc. I've got a co-host joining me here today. So if you use plastic business, it doesn't stay on the books as often. The reason why is because every credit card, debit card, or otherwise has an expiration date. So at some point, they're going to have to call in, up their dip card. They got a new card number, like whatever the numbers are. Or two, what happens with our people all the time? Oh, my card got hacked. Somebody got into my account. I had to cancel my card and get a new one. And now all of a sudden, all the things that were attached to their payment account are no longer going through. So if you collect a method of payment that is plastic, direct express, debit card, credit card, then you're going to get paid as earned only. You get no advancing on that. So let's say if you wrote that with AIG and you put it on their debit card, that means if I had a $75 a month plan, I'm getting $75, well, actually on the first draft, and then so on and so forth for the remainder of the 12 months, the entire policy, as long as now the downside is it's less money up front. The positive to this would be you don't have any potential for chargebacks. So if they cancel their policy, they don't make a payment or whatever happens, you didn't get paid any advancing. So now you don't owe anything back. All the dollars and everything you earned on that policy, you get to keep. You don't have to pay anything back to the carrier or otherwise. Whereas go ahead.
So essentially what you're saying with this is that try not to post date it so that way it can go issued and you get paid faster.
Inadvertently, yes. We're always going to have the defaults. We're always going to, everybody knows what the assumptive close is, right? We're going to assume that you're going to buy this policy. Like, we're going through this process because you need the coverage and you're the reason why you're here. I'm going to assume that you're going to buy. When you walk into Chili's and you sit at the table, the waiter is going to assume that you're going to buy something, right? That's the assumptive close. Same thing with the payment. I'm going to assume that you want to pay today because you don't get covered until you submit your application and you make your first payment. So yes, I'm always going to assume that payment is today. However, when you get the objection, I can't afford it, I don't got money. It's like, oh, okay, no problem. We'll schedule this for your next Social Security benefit. When do you get it? The first, the third, or is it the second, third, or fourth Wednesday? But the default there is always going to be leading with, I want to get it paid today. Just for the same reason you mentioned. So if you get something like Trinity, that's 50-50 on issue and on first draft, if they pay today, you're going to get all of it today, right? Or this month, I should say. Or with AIG, if you schedule it for this month or for today, you don't have to wait till next month to receive the commission on that income. So yeah, that's kind of a side thing that I didn't actually specifically mention, but thank you for pointing that out there, Stacy. All right, let's dive a little bit more deeper into calculating commissions. I wish that I was fancy and I could like do the whole thing where it's a PowerPoint where I leave all this stuff off and then it just adds one at a time as I click through it, but I'm not that smart or fancy. So we're going to just look at the whole thing. Well, let's start from the top down. So number one, you're going to take your monthly premium. I think we all understand what a monthly premium is, right? Whatever they're going to pay monthly for the policy. Multiply that by 12. And again, in some cases, technically, there's another calculation inside there called the modal of payments. We're going to disregard that for the time being. We're just going to keep it simple. So we're going to say monthly premium times 12 is your annual premium, right? And now how do I figure out how much of that money is owed to me? I multiply that by my commission rate. So for you guys, depending upon the type of policy it is, depending upon what tier you're in, it could be anywhere from 20% all the way up to 50%, just depending on the policy and what tier you're in. That would equal the total commission that you're owed for that policy. Now, if you want to multiply that by the carrier advance, like we just talked about a minute ago before, whether that's 50% or 75%, that tells you how much money you're going to get paid on right now. I say today, not technically today, but what you're eligible to receive right now. Again, keeping in mind whether that means that's on issue or on first draft. And then the remainder of that money, because we just calculated the advance, the remainder of my total commission is going to be paid to me as earned, either in months 7 through 12, in months 10 through 12, or the entire thing is as earned, and you get as earned for months 1 through 12. I've got some example numbers to hopefully illustrate this a little bit better. Questions on this part of it so far? Cool. All right, so let's use an example policy. Let's say, congratulations, you wrote a $75 a month monthly premium. So if you calculate that over 12 months, the AP on that policy is $900 AP. That's how we kind of talk about it. For example purposes, we're going to say you wrote the policy with SBLI as a level policy, standard or preferred, and that you're in the veteran agent tier of commission. In other words, the 50% level. So it's a level policy and you're at the veteran level, the 50% commission level. So that means you are at a 50% commission rate, which means out of that $900, you are owed a total of $450. That's your earnings on that policy. Multiply that by 75% of that carrier advance. So if you want to figure out how much of the 450 you're going to get today versus how much of it will be later, 75% of 450 is $330.50. That's what you're eligible to receive now, or that will be paid on your monthly commission, right? And then the remainder of that will be paid as earned. In this case, that's because we had a $75 a month premium. 50% commission rate means that you're going to get $37.50 a month for months 10, 11, and 12. Is all that making sense? Cool. So here's what I'll tell you as far as chargebacks go. So a chargeback occurs when you get an advance and then the client otherwise doesn't pay the bill. So for an example, this $900 policy that they're expecting to collect from the client in the first year, let's say they paid you $337.50 today, and they never make a single payment because SBLI pays, no, they pay on issue. Let's say they make one payment and then the following month they drop off. That means they made the $75, which technically your commission on that would have been $37.50. So now you owe back the difference. The way that I kind of keep it simple is if they make 8 payments and you got paid 9, then you owe 1 payment back. If you got paid 9 payments and they never make a payment whatsoever, you owe all 9 months of it back to the carrier before you'll start receiving commission back on top of that. That's how that works. So some people will go, well, I don't like chargebacks. That doesn't sound good to me. I don't want to have to worry about getting paid money one month and the next month they cancel and I owe a portion of it back. I'm just going to go as earn only. So that way I never have a chargeback. I never owe any money back. The problem with that is that most people, let's say you wrote 15 policies, 20 policies in a month, you can't live on the as earned dollars alone, at least in the first month. Now, when you get to month 10, 11, and 12, and you're stacking all those policies, you're having more policies paying you every month, then that makes sense. But initially getting started, next to nobody can afford to go as earned only from day one. It's just really challenging and difficult. Less so with this program because you don't have lead costs, because I was typically paying anywhere from $4,000 to $6,000 a month in leads. And that wouldn't cover your lead bill, let alone have enough money for take-home money. But that's just the way the commissions, the advancing, just the industry in general, how it works, how the commissions work. So does everybody have a better understanding and idea how commissions work? Good. Making sense.
Yep. So I'm sorry, you probably just said this. How does that work with us with our chargebacks?
Oh, so as far as your chargebacks go, let's say for an example, you've multiplied all the stuff that you wrote for the month of, let's say for the month of August, right? We owe you a total of $10,000. However, some of the business you wrote in July fell off the books, right? And let's say of all the business that you wrote versus fell off, you got paid $10,000 there, and 20% of it fell off as an example. So that's $2,000. So the $10,000 we owe you for this month, we'll deduct that $2,000 that would have been from any chargebacks, and then you get paid the difference on that.
Okay, so we clear up our all of our chargebacks on a monthly basis.
Correct. Now, the advantage here is to like it going through the agency versus just going with the individual carrier. What'll happen is once you start adding more carriers on there, now you're selling RNA and Mutual of Omaha and Liberty Bankers and American Ambull. Like you got 10 carriers. The problem happens when you write one policy per month with whatever, or one policy every 2 months, and then you get a chargeback on that business. Now you owe money back to that one carrier. So you either write another policy with that carrier, and if it's a one-off carrier, you're like, I don't really use them unless I run into this. So now you're like, oh, great. Now I've got a negative balance and they're bothering me about, I owe them $300. Now you got to literally write a check to the carrier to cover the chargeback because you either write another policy or you just write a check for it. Otherwise, that is considered a debt. You owe that money back to the carrier. That's subject to personal credit reporting and things of that nature. And so that's how that would work. The advantage to us is we're on the hook here. The agency is on the hook. You're not on the hook. So if you wrote a bad policy with Sika and you didn't write another Sika policy ever again, we're on the hook to cover that chargeback, in other words. But the likelihood is that somebody else is going to write a policy with that carrier and cover the chargeback. Now, it's still deducted for you on a monthly basis, but you don't have to worry about writing a check to a carrier as you would as an independent broker, in other words. I think that concludes this portion of the show. We're already at almost an hour. Questions on selecting a carrier? Oh, here's one interesting thing that we did not cover. And this came up earlier this morning. Let's switch over, share this tab instead. Okay, so insurance toolkits, you guys should all be familiar with it. So there was a question about accidental coverage, right? So what I believe the client was asking about is actually an additional accidental coverage, which is not available with any of our core carriers. As an example, let me show you what they were actually probably, I'm assuming, talking about. So a company like Mutual of Omaha, what they offer is for a couple dollars more, so you can spend $56.48 for the $10,000 coverage, or like you can see here, the accidental death. If you spent $59.98, so just a couple bucks more, you can upgrade it. If you were to die by accident at any point in the policy, that as long as you own it, it will double the face amount from $10,000 to $20,000. Typically, when people ask for accidental coverage, that's what they're usually referring to. And it's just simply because somebody they know at some point got signed up for it and they got this accidental coverage. The reality of it is, again, if you kind of like look at the numbers and like kind of understand the carriers, kind of why the numbers, what the numbers are telling you is, the reason why it's only a couple dollars more to double your face amount if you die by accident is because they're extremely unlikely to die by accident once you reach age 50 years and older. The people that are buying final expense policies are normally 98% of the time dying from a natural cause, heart attack, cancer, stroke, etc. And it's very unlikely that they die by accident. So that's the reason why, hey, $2 more, I'll double your policy. And this is the case where I'd mentioned to somebody before, where an unscrupulous agent can tell them, hey, I'm going to sell you a $59.98 a month for a $20,000 policy. But it's not actually a $20,000 policy. It's a $10,000 policy with an accidental death benefit rider. A rider is something they add on to the original policy. So in this case, there's an accidental rider. So if you die by accident, they double the policy. Other riders that you may get asked about, or you'll see commonly, is sometimes you can have a rider to cover a kid or a grandkid or whatever. Like Mutual of Omaha, I think, is one that's actually popular for this. So for $5 more, actually Great Western was really good about doing this. Like for $2 more, we'll give you a $5,000 policy for a grandchild, like, or whatever it is. So not only does their policy cover them, but it's also a $5,000 policy for the grandkid, whoever they name on the policy. None of our carriers, by the way, the carriers offer this accidental coverage. Quite frankly, it's just more of a gimmick than anything else, to be honest with you. That's the reason why the carriers that we use don't choose to offer it, is again, because it rarely ever pays out. Now, the kind of weird difference here to understand or wrap your brain around is the accidental coverage. So 100% of every single policy that we sell is 100% face amount full coverage, as long as they have their application, their premium is paid, anytime they die by accident. So even with AIG, even with GTL, if they die in that first waiting period by accident, they are 100% covered for the full face amount. Does that make sense? I don't know if I see any surprised eyes here. I don't know if you guys understood that part. So let me say that again. If somebody dies during the waiting period for AIG, like the first 2 years, where it's, hey, if you die in the first 2 years, you get your return of premium plus 10%. The reality of it is, if they die by accident in the first 2 years, they're covered for 100% of the full face amount. So that's how I sell my AIG policies. I go, listen, if you die after 2 years, you're 100% covered. If you die within the first 2 years by accident, 100% covered. The only time that you would get a return of premium plus interest is if you die in the first 2 years by natural accident or by natural causes. You're not planning on dying today, are you, Mildred? Or planning on dying in the next 2 years, are you? And, kind of a joke, right? But that's how I present it. So as long as if you either hit the timeline or die by accident, you are 100% covered for the full face amount. I don't know that we've ever brought that up before, so I want to make sure you guys understand that for yourself, as well as explain that to the person. Other cool thing about AIG is that they have a pay up period. So they can get paid up on their policy at age 90 or younger. So if you get somebody, and normally with AIG, this is not the case. It's normally older or sick people. Obviously, it's a GI policy. But you get somebody, most people don't bat an eye on it. 10% of the time when I tell people this, like, oh, okay, that's cool. So essentially, whenever you write the policy, you've probably seen it on there. If you go to the AIG website and before you open the actual application, you quote them on the AIG website, which basically just reconfirms the information you put from Insurance Toolkits. You put in their age and their state, because that's really the only male, female, and their age are the only things that really dictate the price there. And what it'll tell you is a payoff date or pay up date or pay to date. And so it's like, hey, Miss Mildred, whenever you reach 87 years old, you no longer have to pay for this policy. You will be 100% covered for the rest of your life, and you'll never have to pay again. Because let me tell you, when you're 87 years old, I'm sure you've got much more important things to worry about with your dollars than continue to pay on this policy. Because you'll get some people that are like, oh, well, I'm going to end up paying more into this plan than I'll ever get out of it. Well, with AIG, one of the reasons why we like it, not only do they pay better commissions, that 75% advancing, their persistency is really good for GI, but also is that as a side tertiary benefit for the client is that they have a payoff date. Normally it's, I think it's maximum of age 90. And then by the way, they have a maximum age of 80 to accept them into the plan. So even somebody who's 80 years old would only pay on it for 10 years, and then the policy would be paid off. Cool. Glad we covered that. Yeah, because I don't know that we've mentioned that part of it either. One last thing I want to share with you cats before we go is the updates that I've made to the carrier cheat sheet. So the carrier cheat sheet is available on Slack. If you go to a Final Expense Agent chat, it's bookmarked at the top of that page. Actually, let me see if I can show you while we're here. In case you've never looked at Slack, if you always look at it on your phone, let's see, right here. So here's Final Expense Agent chat. There's some links up here. That's that health insurance calendar to book an appointment if they want to talk to somebody about Medicare or otherwise. That's my Zoom room link. And then here is the carrier cheat sheet. That's where that's located in case you haven't seen it before. I would recommend bookmarking it somewhere on your device so that way you always have access to it. So multiple updates. Let me switch to this. Multiple updates to our carrier's cheat sheet. So you can see there's more pages down here. And I'm trying to go through quickly because we're already out of time. First page here is now only going to show you the core carriers. So to make things more simple, more streamlined, easier to look at, find the right information. I've only got core carriers on here. I've updated some of these numbers. They were off. GTL actually goes up to the age of 90. So I think Hank, our dentist, there was a case where somebody in New Jersey was 86 years old. They were too old for AIG, but Sika wasn't in the state. Actually, GTL, assuming that they can qualify with those 6 health questions, would offer them coverage up to, just as a side note. Then we've got kind of the details here. I've updated a little bit of this information as well. There's been some questions from agents who are trying to call the carriers to complete the voice authorization on Saturdays or other time periods, and they didn't understand what hours they're open. They're not 24/7. They're call center kind of things. So if you're calling into one of those places, you can see Trinity and SPLI both use MRS or Agenium. I always say this wrong. So this is the same app, by the way, for both of those carriers. For Trinity SPLI, those hours are the same if you're going to do a voice. In addition to that, I've updated the all carriers. This looks completely new and different. Much more information. And let me point out a few things of why you're going to love this. First thing is we've got an overview video of all of the carriers, just kind of giving a general synopsis, kind of like I'm talking about. AIG's cool because you only pay till 90. GTL and SPLI offer Sequoia. Like all of those details will be included in these videos. How to complete the application. So there is either in this case, there's a PDF document walking you through with screenshots showing you how to do it. And in some cases, there are actually videos. Like here's a video of the GTL app. Let me share this screen instead. So I would highly recommend reviewing it. I'm getting lots of hearts and happy people from seeing this information. So I'm glad you guys like it. So here is, oh geez, give me a minute here. It's thinking. But this is the video for the GTL application. There we go. You're going to see the lovely and handsome Mr. Tim Hickenbrand. There we go. So an entire video walkthrough on GTL's application. So hopefully you guys see that and appreciate that. I think we have the same thing. There's a video here for Sika. Let's see, and I'm not sure about the other ones. You can go through and look there. There's also how to complete an application. Oh, that's the video for the carrier, how to complete the application on video. The agent guide. So this is going to be going over the basic information of the carrier. So I'll pull up AIG right here as an example. So you can see, look, right off the bat, 5,000, 25,000. He's like all of the things that you kind of want to know, the commission chargebacks, 100% year 2. So if they die in the first year or 2, what do I get charged back on that? Also, here's that maximum payment age. So you can see maximum payment age varies. I think it says somewhere on here is maximum of 90. So you can see here, this is 90 maximum payment age. So everybody stops paying. So you can look at the male or female. Let's say, like I mentioned before, they're 80 years old today. Their last payment is when they turn 89 years old. So it'll actually say that on the quoting software, but just if you want to go through for your own reference. So we have all of this really great agent guide information for all the different carriers now. There's links here to start the e-app, which you can get there either. You've got a bookmark on your computer. You can get to it by clicking the link on Insurance Toolkits, or if you're looking in here for a policy, then you can click on it from here. Sample applications, I don't have them for all of the carriers, but for some of them they do. And it's not like a sample e-app where I can fill it out and practice. Mostly the important part takeaway is I have all of the medical questions that I'm going to ask somebody. So if there was a specific thing that I was worried about, like for an example, it tells you down here at the SPLI, it should say somewhere on it, it'll tell you if they say yes to any of the questions in part A, that's a decline. If this is all no, but they say yes to the part B, that's going graded, or that's going standard. If they say, I'm saying that would be graded. And then the last one, part C, if they say no, that would be preferred. If they say yes, that would be standard, right? And so that's how they make those decisions. It's literally based on these questions that you can know, practice, and review and understand before you get there. That is very helpful information as well. Let's switch back here. So there's a rate guide there. So if you wanted to quote them manually and look at there, that you have that access. Prescription drug guides from not all the carriers offer them. So Trinity, I know, is an important one that you want to make sure you pay attention to for drug purposes. Build chart, which build chart is height and weight. Some carriers like AIG, I don't care how big or small or tall you are, you're always going to get covered. Same thing with Sika, same thing with Gerber, same thing with GTL, same thing with RNA. But some of these other carriers, if you're too thin or too thick for your height, you either get downgraded or you won't get any coverage at all. Some information on advancing here, how it works, 75, 50%, kind of all those numbers we talked about a minute ago. When they pay you, so on issue, on first draft, etc. And I'll also mention here, like AIG, 75% on first draft. If for EFT, electronic funds transfer, bank draft only, debit card is as earned. So in case you're curious, there's a quick little cheat sheet information on that different stuff we already talked about today. Suggested uses when to use this type of product, right? And phone number for underwriting support, home office, the date. There was a time and point in place in the script, and maybe it still is today. You guys will have to let me know if it's been removed or not. But typically, like, all right, Mildred, the company that I want to sign you up with today is a company called AIG. They're based in New York, New York. They were started in 1919, and they have an AM. They have an A rating for the AM Best rating scale. So I always like to include that in the conversation. It makes an impact maybe 2% of the time, but it just establishes you as the expert and like the reason why. Like, I've never heard of Guaranteed Trust Life. Why do I want them? Like, what are those guys? Oh yeah, great question. They're based in Glenview, in Illinois. They're actually founded way back in 1936, right? Even before you and me. And they have an A rating with the AM Best rating. You can actually look that up for yourself in case you were curious. So that's that information. So if it's part of the script, that's where you grab those details from. And if it's not part of the script, my advice is to throw it in there. When important. I don't know that I would include, hey, Trinity's been around since 2004, or Sika, the company's been around since 1966. But that policy just started, that final expense policy just started last year. And so that information could be potentially helpful when that time comes. Interview phone numbers, fax phone numbers. One thing that we can disregard here is going to be on this application type. If you see paper, we're not doing paper, obviously. This is for whether you're telesales and or a face-to-face agent, this information here. And so if you see paper app that's unimportant to you, what you should be gathering is like Trinity Family Benefit. You can do the entire application by voice. You never even have to open the e-app. I wouldn't recommend doing it. I recommend using the e-app and then adding MRS, but they do have the option to do an entire voice app only. So if that was a situation where would be important for you. So I just want to share the updates there. In addition to that, we've added this kind of a cheat sheet for health conditions. And the ones in green are the ones that will take them and accept them for that particular condition. So let's say you have somebody that smokes marijuana. And I actually highlighted our core carriers. So if they smoke marijuana, there's one company they don't want to go with. Trinity Family Benefit specifically asked marijuana use in their application. The other carriers don't even ask the question. So if they don't ask, then that means it's accepted, right? They don't specifically say marijuana use, then they don't care. Another important one, here's oxygen. So like I mentioned before, previously oxygen, there was no option for oxygen except for GI, but now Sika will take oxygen use. Sika also takes where are you? CHF, congestive heart failure. Here you go. So here's CHF. Sika will take them standard. CHF is also offered by Guaranteed Trust Life. But if I had to choose between standard level coverage with Sika or a graded policy with Guaranteed Trust Life, I would go with Sika. Same thing, like GI accepts them, but Sika this is for their level coverage, standard coverage. Sika will take them first day full coverage with CHF. Or I'm sorry, that's COPD. Yeah, no, that's CHF. Okay, perfect. CHF is a much more critical condition than COPD. It's kind of the advanced version of somebody with respiratory or circulatory issues. So it's typically more critical, and less carriers, in this case, only one will offer them first day full coverage. Previous to Sika, nobody offered first day full coverage. The other one is dialysis. So if somebody's receiving, if they're an end-stage renal disease, they've got kidney failure, all those things are the same thing. Dialysis treatment is standard with Sika, whereas you can't get anything other than GI. Otherwise, even GTL doesn't take dialysis. So that would be your best option there. So that's a cheat sheet on the conditions. One interesting thing here, that's not just health condition, there's felonies. So if somebody has a felony, that can impact whether they're eligible. Hospital stays, how recently they stayed in the hospital. So with Trinity Family Benefit, if they're in the hospital, and hospitalization means overnight, it means they were admitted to the hospital, they stayed overnight. Whether they got any kind of treatment, observation, it doesn't matter. If you're admitted to the hospital, then that counts. If you go into the ER and you get treated and you leave, that doesn't count. Even if you can go in the ER and you stay there for 24 hours for observation, that doesn't count. Hospitalization means you were admitted. You went up to a regular floor. You got off of the ER. You went into the actual hospital. For Trinity Family Benefit, if it's less than 6 months ago, that's an automatic decline. So they could be healthy as a horse, but if they had some kind of like, hey, I had an AFib or some kind of minor health condition, if you got admitted to the hospital for observation, you are a decline with Trinity. And some people will forget this information. So this is what happens when you punch in the information. Well, Insurance Toolkits told me that it was this, but if you forgot to ask about hospitalization, they could be healthy on no meds, no history of anything. But if they had that hospitalization and they see that in when they do their check, then they'll get declined, not just downgraded, but declined. So there's that. There's also prescription information here, some common spelling, some common medications and what they're used for and how some of the different carriers use it. So in this case, if somebody is on a Narcan for a drug overdose, actually, let's use nitroglycerin or nitro. This is a medication that they may not use on a daily basis, but they could be prescribed it. Almost always GTL or GI. So it's going to be very hard to get that approved for first day full coverage with any other carrier. So if I had nitroglycerin, Regardless of what, I'm going to use this information in addition to insurance toolkits to do my own best underwriting as possible and use either GTL or GI if I see that medication come up. So that is the updated version. And I've got some Spanish resources. I think right now the only person who can sell a policy in Spanish is Maria Nella. Is that correct? Anybody else able to speak Spanish well enough to sell in Spanish? I think you're our only bet, Maria Nella. You're our only option. So there's some information here for Spanish stuff. So sometimes they'll have e-applications available in Spanish. Sometimes the policy will be in Spanish, voice signature in Spanish. I think Trinity, that's the only one that does that. This information is incomplete, not guaranteed to be 100% accurate, but it is a good starting point for you. So hopefully you guys found that information helpful as far as selecting a carrier, how often you should with one carrier or the other, what type of policies you should be writing and how often, and then the updates to the cheat sheet, which if you haven't been using it, I highly recommend you need to have the script, the cheat sheet, and insurance toolkits up on a screen at all times, anytime you're making dials, along with the dialer, the CRM, and the application for the carrier, those kind of things. But hopefully you guys found that helpful. Any questions on any of that information? I know it was a lot, but hopefully you guys gained a lot out of it as well. Hank, you got a question for me?
Yes. Actually, a quick question about this was mentioned by John about the GTL application, and then he said I think he mentioned the post. He said that we actually don't have to read the authorization when we're doing the when we're going through the GTL app. So we don't actually have to read it, but then ask the question, have you read this to the client, right after the authorization? So can he, kind of, how do you, what is the word?
Yeah, you just check that off. You just check it off and keep it moving.
Oh, okay. And we were just totally good. We just don't have to read the authorization. Okay.
Correct.
Okay. Got it.
Yeah,
Thank you so much.
I would always recommend using whatever the carrier says over what I tell you, over what the cheat sheet tells you, over what insurance toolkits tell you. Go by the carrier, because that's where all that information is based off of. So in this case, I believe John did us a favor, and John, you contacted GTL on this, correct?
That's correct. They actually told me that there's no place in there that's telling you to read it. And I commented that there's no place in there that's telling me not to read it either. But apparently Hank just brought up it is asking you that. So yeah, but just check it off, keep it moving. Like I said, that's what they said.
Cool. And if in case you missed it, Hank, we do have a video now on the cheat sheet specifically on how to fill out a application with GTL. And I would assume that information is covered there. If somebody watches that and it's contradicting what we're telling you now, please let me know. And we can get clarification from GTL. Sounds like John's already done that, so I think we're good to go. But I would highly recommend going back and watching the videos for the different carriers. This is going to be honestly more thorough and more complete, probably even than our carrier and underwriting section in the school trading platform. I think the carrier information is now better and more thorough in the cheat sheet than anywhere else. So
one other quick thing, JD, on the hours portion of the cheat sheet, can you just finish up Trinity Family Benefit? It cuts off the Saturday hours, says it starts at 8 a.m., but doesn't include the closing time, if you could.
Yeah, if you, let me see here. Let me show you. Boom, boom. So if you were looking at, this is just the core carrier sheet. You're looking at the hours, like you're saying, it says Saturday 8 to I don't know when. It's actually the same hours as SBLI. Because it's the same third-party agency. It's this Agenium. But if you just click on it on any of these things, you can see the entire text here. Can you see that there now? So even though it doesn't show the full thing here, let's go to another example. Maybe not on this page. Let's go over here. I know there's some on this page. Come back to me. Well, not that you want to see the whole link, but if you wanted to see the whole link, you can see all the information. Just click on the box and it'll show you up here in that window. Cool. All right, my friends, that's all I've got for you guys today. Any questions, carriers, commissions, carrier cheat sheet? If you guys got a much better understanding as far as carriers, hopefully you do. I know that I do, going through this exercise.
Yes, I did not know a few of those things. So that was really
Okay, cool. And I will continue posting these videos to school. So you guys can go back and review that information in case you came in a little bit late. Maybe you're on another call, had an appointment or something. Hank?
Yes, a quick question about the commission. So this is just to have an idea. Let's say our commission gets surpassed the $300 advance every week. Then when is the rest of the money going to be paid, like monthly, on what date?
The honest answer to that, Hank, is as today is ASAP. So as close to the end of the month as humanly possible. But being that this is the first month that we're going through this exercise and training our accounting and admin and people, all the bookkeeping staff, how to find this information, the information that we're getting from that we're posting into Go iLevel and the Sold Policy Tracker, etc., and reconciling is what they call it in accounting terms, making sure all that information is accurate. Then they have to go into each individual carrier website and look up each individual agent and look at each individual policy. So once we reconcile all of that, smash it all together, figure out what the carrier would have paid you for that month, then we'll pay you the lump sum of whatever. We'll take the difference from whatever you got prepaid on the weekly versus what you actually wrote, and that'll be your monthly commission check. And when that'll happen, again, ASAP. My hope was that it would have already been done by now for the month of July. But I know that our teams, they're actively working on it. I've been talking to them off and on all throughout this week, verifying some of those details and how that works. And so the real answer is as soon as possible. Moving forward, we'll get more consistent. We'll have a better idea. Hey, it's going to be on the 15th. Hey, it'll be on the 12th. Hey, it'll be on the whatever the date, the 5th, the 3rd. I don't know what the date will end up being other than as quickly as humanly possible. So thank you for your patience, and sorry I don't have a better answer than that.
Sounds
Cool.
good. Thank you.
Absolutely, my friend. Absolutely. All right, my friends. Well, thank you guys. Congratulations so far on the production this week. We have got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 sales on the books. Absolutely fantastic. We still got more than halfway through. We got Thursday, Friday, Saturday to continue hitting and banging it out. And so looking forward to see what you guys are doing. I unfortunately put the teams unbalanced for this week. So it's been a runaway from the Final Expense Foxes, I think. The life insurance Lions only got 1 policy out of the 9. So I apologize for, unfortunately, I can't predict how everybody's going to do week to week basis. I try to keep it as close as what I think is going to be in the upcoming week. But right now, unless something dramatic happens, we still got a chance for Dennis, James, Kai, and Ariel to throw some points on the board to hopefully make a comeback here for us, like a Peyton Manning style comeback here, hopefully in the 4th quarter or the second half of the week. So. John says no thanks. No comebacks, John. All right, good deal. All right, guys. Well, again, I greatly appreciate you guys. If you guys need anything from me, please reach out to me. Happy to help you, and I appreciate your time. And we'll talk to you again soon.
Thank you.
Thank you.
All right, bye-bye.